introduce and welcome again our moderator for this morning, Greg Setskorn. He is the Healthcare Exco Chair at the FIA, and he is going to be moderating this session for us as well as introducing our esteemed speakers. So, Greg, I'm going to hand over to you in your very capable hands, sir. Please shout if I can be of assistance this side, but welcome and thank you, Greg, for taking us through this presentation.
Thank you, Bernard. Good morning, everyone, and welcome to today's healthcare webinar on key updates in healthcare policy and regulation. As Bernard introduced me there, my name is Gregory Setskorn, and I'm the chair of the FIA Healthcare Executive Committee. Just very shortly, at this point junction, I would just like to mention Andre Jacobs, my vice chair, Fazlin, Jackie, and co on there, Gary, John, etc., all the people that have contributed significantly to our Healthcare Exco, and not to exclude any of the other Exco members, but people that day in and day out contribute towards the well-being and the future sustainability of our healthcare intermediaries and indeed our clients in the country. It's a pleasure to have you all join us for this important session, designed specifically for intermediaries and healthcare professionals, navigating the rapidly evolving healthcare funding landscape. We've brought together leading industry experts to provide you with the latest insights on regulatory changes and what they mean for your clients and your business. I'm delighted to be moderating today's discussion, and I encourage you to engage with the Q&A with our speakers and make the most of this opportunity. Thank you, everyone, for joining us. I look forward to an informative and interactive session. I'm now delighted to introduce our first speaker of the day, Taneshan Naidu, CEO of the Health Funders Association. Taneshan brings extensive leadership experience across healthcare, finance, and entrepreneurship with a strong background in corporate governance and strategic growth. He holds an MBA in strategy and marketing and an MSc in electrical engineering. Taneshan has held key roles at organizations like Equal Holdings, Healthforce, MedShield, Medical Scheme, and Discovery Health, where he has driven innovation and financial transformation. He's also the founder of Insanely Lit, a social enterprise focused on design and youth employment. With experience at leading companies such as ABSA, Nedbank, Deloitte, FNB, and Sasol, Taneshan is recognized for pioneering new healthcare products and publishing research. He's passionate about entrepreneurship, social upliftment, and the outdoors. Please join me in welcoming Taneshan Naidu. Welcome, Taneshan.
Thank you, Greg, and thank you very much for those kind words of acknowledgement as well. So very, very warm welcome, and I hope warm welcome. I know it's cold out there, but I think make yourselves comfortable, and I think I'm going to take you through the next 45 minutes through my presentation. I just want to make sure, can you give me a thumbs up if you can see my screen?
We can, thank you. Perfect.
Great. Fantastic. So I've got for you pretty much a lineup of topics that I'm going to take you guys through. So starting with, I'll just give you a quick introduction to who HFA is, and then I'll run you through a bit of industry updates that you guys would be insightful for yourself and your clients. I'll run you through some industry report updates that were published by CMS in 2023. And then I think what's been obviously topical and public pretty much for most of this year, but particularly, I guess, in the last year or so, was HFA's NHI challenge. So I'll run through that as well. Okay, so just as a quick introduction overview, so HFA was established in 2015 as a not-for-profit organization. We're the voice of industry for 20 medical schemes, 3 administrators, 4.1 million beneficiaries, and approximately 46% of all beneficiaries of medical schemes in South Africa. So collectively, amongst all of that, we have deep experience, knowledge, and expertise in healthcare funding. And, since inception, we've actually been advocating for sustainable and equitable healthcare. And very much when we put forward proposals, it's all about ensuring, best healthcare, not just for medical schemes, but as well, for the whole country. So just before I run into the details, I thought, let me just give you a quick overview of what HFA is actually, actively involved in. Either, topical as the NHI in front of screen and in front of media, or, behind the scenes. So NHI is obviously one that everyone's aware of. We actively engage with PMB reviews through CMS, low-cost benefit options as well. We actively engage there. The DTIC interim block exemption for tariff regulations, we've made submissions in there. The fraud, waste, and abuse endeavors that are ongoing, and I'll chat about that shortly. Regulation DESI, which is regarding investments in medical schemes industry, health technology assessment, and then quite importantly, none of this actually happens without actually proper stakeholder engagement and relationships and building that. And interestingly, I met Greg a few months towards the end of last year. And, I think this is part of the relationship building. It's being able to provide factual information to organizations like FIA, who can take that message to their clients, to members. So it's for the betterment of the industry. It's to ensure that there's calmness, not to panic, understand the way forward. And so that is very much where HFA actually is involved in. Some of the operational matters, so the PCR, which is the COVID test, and I'll give you a quick overview of it. Undesirable business practices regarding DSPs and networks, etc. So we're involved in that. The RAF matters, which is very topical. The SARS disability info, IFRS 17, etc. and so on and so on. So we actually play in a lot of strategic and operational matters. Not just here. And at some point in time, we'll actually, when as needed, come to you guys and give you updates on it. So for today, very quickly, just an industry update. So can you believe we actually almost halfway through June and halfway through the year? So it's actually almost 6 months into 2025. And, when somebody actually wished me at, I think it was the beginning of the year or so, they asked me, may you live in interesting times? And then when I went and researched it, it was actually, wasn't a blessing, it was actually an ancient Chinese curse. And I can tell you without a doubt, we have been living in really interesting times. If anything, it's been keeping us up at night and over the weekends. So let's just start off with NHI activity, what's happening in there. So we started off the year with, there was supposedly an NHI breakthrough where ANC agreed with the DA not to collapse medical schemes. I think if you guys remember in February, and then the very next day, Motsoaledi came out and distanced himself from any informal deal that was struck at the sidelines of the cabinet Lekotla. In many ways, I was sitting in this and thinking, this was very Shakespearean. It was all about NHI Section 33, to be or not to be. That was kind of like modern day Shakespeare in happening in reality. And then shortly, I think it was later towards the end of February, the private hospitals through HASA lodged their NHI court challenge. As well, in March, then NHI draft regulations were published, which we've already responded to, as well as HFA. And then SAMA joined the party on the 1st of April, lodging their challenge against NHI in High Court. And then government came out in April, considering they had 5 legal challenges to try and reassure the private sector, don't worry, we're not going to actually abolish you now. It'll take us 10 to 15 years before we abolish you. It wasn't very little comfort because it's still on the wrong track nonetheless. And more recently, you would have heard as well, Ramaphosa was actually requested to hand over his records for decision-making regarding how he got to signing the NHI into Act. He's recently appealed that to as well take that to the Constitutional Court. And then, can you believe it? It was actually just a week ago, in fact, and about this time, approximately a little bit earlier, we actually had a media conference launching and announcing HFA's legal challenge to the Act. So it's been quite a prolific year in terms of NHI matters. Regarding road accident fund matters, just to give you some understanding of where we are, there are approximately 10,000 road accident fund related to medical claims that are in the pipeline that have not been resolved. And that totals about 2.3 billion rand in open claims that still needs to be adjudicated. But one step further, there's 250 million rand in judgments that needs to still be paid over to medical schemes, So it's actual court judgments. But the Road Accident Fund actually hasn't fulfilled that promise. And then, in December, there was a judgment that came up on Malambo, which actually created huge consternation and confusion in the entire industry. And it was highly critiqued around it. Particularly, it found against Discovery Health and in favor of Road Accident Fund. In April, 9th of April 2025, leave was granted for DH to approach the Supreme Court, the SCA, to challenge that. So Malambo's actual judgment has actually been put in abeyance. So we're glad. I think we've got to go through this process to actually get clarity for medical scheme members. In my view, it's actually absolutely unfair that medical scheme members go to the petrol tank, pay their subsidy to the Road Accident Fund, and then are prevented from actually claiming back or being reimbursed, when they're actually in a road accident. I think it's just basically discrimination. So I'm hoping that, through this process, clarity will come and sanity will prevail. And then more recently as well, never a dull moment with the Road Accident Fund. The Road Accident Fund board rescinded the CEO especially, but suspended him for insubordination. So it's quite an active sector. On the PCR matter, just to bring you up to speed, just in terms of it, around 2021, well, actually somewhere around 2022, HFA laid a complaint with the Competition Commission regarding excessive pricing of PCR COVID tests that were being charged by pathology labs. HFA represents, at the Competition Tribunal, approximately 36 medical schemes and 5.6 million members. So in March 2025, the tribunal found in favor for HFA on 8 of the 9 exceptions that were raised by pathology labs. What that meant is it allowed HFA now to proceed to the full hearing by the Competition Tribunal on substantive merits. And we're hoping, if not later this year, sometime early next year, that hearing will actually proceed. So besides, progressing that way, we've actually got, the support from our regulator. CMS has actually welcomed, Competition Tribunal's decision. So we are very enthused about it, and I think we've got a compelling case to take this forward. Cool, sorry, it's a duplicate slide. Okay, moving on then into the fraud, waste and abuse there was an inaugural advisory meeting held on the 3rd of April. So at that meeting, CMS presented some of their outputs for 2025. So on the technical work stream, they wanted to update the fraud, waste and abuse charter. They wanted to adopt new SOPs and guidelines regarding algorithms and clawbacks of recoveries of funds, either from healthcare professionals or even, potentially from members, or whichever way, whoever was impacted. And there was also an agreement, a consensus that, the fraud, waste and abuse definition should actually be expanded based on what we've seen globally, internationally, to include error. Because quite often, not often, but in certain instances, when somebody's capturing, they mistype, milliliters, or they mistype, units, and it's a pure incidental error. So we've actually looking at expanding the fraud, waste and abuse definition to include error. Doesn't mean that money won't be recouped. I think it just makes sense that there are instances where there's the intention is good, and it's just a pure error where fraud, waste and abuse is experienced, as well as update the codes of good practice. In terms of the legal work stream, there's been work and update to the tribunal rules in terms of people feel if they've been prejudiced in the wrong way, particularly healthcare practitioners, they can approach tribunals and then ask, to be heard in that, and the tribunal will be able to make a judgment. I think there's been the intention to update it, but also as well, importantly, is to understand how could this actually be funded. So HFA, as a stakeholder, has made extensive submissions on these documents and these processes. And we're hoping, by September 2025, where the next advisory committee meeting is, all of these will be in place. I actually sit on the FW advisory committee now. And then maybe of interest to some of you, a few years ago, there was a Section 59 inquiry launched regarding fraud, waste, and abuse and the racial profiling of healthcare professionals. We understand now that report has actually been signed off by the panel and will be released towards the end of June and possible maybe early July. So I think that will be take a lot of headlines coming soon. On the 31st of March, we had the CMS Health Policy Roundtable. Now, this is an interesting move, and I must say we've seen a lot of traction with the CMS, particularly around some of the key strategic thrusts. So one of them is looking at the PMB package and potentially revising it. So this is what was being tabled at CMS. Still a lot of work has to go on, but they were considering, is there 4 different types of options on the table? So starting from the top left-hand side, a comprehensive package, that includes everything, super specialist management, supplementary PMBs, as a benefit package, or a lesser going to the right, towards the blue. Or do we kind of revise PMBs just to pure core primary healthcare? And when we say core primary healthcare, it's really about nurses, GPs, etc., immunizations. So they are considering this. What I've recently seen as well is they've called for nominations to be part of the PMB advisory group. And the HFA is aiming to, myself as well, aiming to be part of that. We do understand that National Department of Health has developed a primary healthcare package, so there has to be some sort of alignment with CMS, being a creature of government. There needs to be some sort of alignment between what CMS provides and what NDRH is suggesting. So we're hoping, as being part of the advisory group, we will actively comment and provide input to it. I think, needless to say, and you've probably seen this and experienced it, a lot of our members, our schemes have actually seen over the years, and particularly more recently, some creep in what is defined PMB level of care benefits. And those have actually crept into the basket, but not necessarily done without any health technology assessments. I know, for example, recently there was PET scans added to it. And I think there is a point of where it needs to be added. I think it just needs to be done with one evidentiary evidence, medicine-based evidence, as well as understanding what is the actual impact on the scheme's funding and the position. Because the problem being is we're already in a situation, that PMB packages are extremely expensive, medical schemes are expensive. We keep on increasing the size of the basket. We have no, and because we are not-for-profit, it just means every year the cost of medical schemes increases. So there needs to be a balance on this. In terms of LCBOs, I know Vernon's on the line, so he'll take you through more detail, but I thought let me just give a one-slide update on it. So if most of you guys remember, it was a Valentine's special where they helped understand low-cost benefit options for medical schemes. There was an article requesting for commentary on it. CMS then extended the current exemption for primary healthcare policies, for a further 2 years for insurance policies particularly. And then in April, BHF lost the low-cost benefit option battle, forcing and requesting CMS to actually enable low-cost benefit options. I think just in summary, though, we made an extensive we made extensive submission to the minister and the various parties regarding the LCBO. And what we kind of said is, it's absolutely essential. We do need an LCBO. What we recommend is complete the PMB review, allow medical schemes to participate in the exemption process to provide primary healthcare cover. As part of the movement going forward, enable incremental transition of insurance products to medical schemes with proper regulatory clarity. And to make sure that no one is harmed, or at least there's minimal harm to it, enable no underwriting, for 6 months during the transitionary period, or as agreed, those are part of the kind of suggestions. And then LCBOs, fundamentally pay a practical and scalable pathway towards UHC. And in fact, it's part of the SDG 3.8 and aligns fully with national policy. So I think it is acknowledging and positioning it as such, as a pathway to SDGs, as well as being a primary healthcare potential, which is acknowledged by United Nations, the World Bank, as well as WHO, as the cornerstone for healthcare. And then lastly, amend the Medical Schemes Act to accommodate LCBOs. So those were, in a nutshell, our recommendations. And to cap it off, we said the introduction of LCBOs could increase access to potentially 10 million people in South Africa. So 10 million people who currently either use, public healthcare or, out of pocket, could gain access to private healthcare through the LCBOs. Okay, so the other one which was of relevance and interest was Department of Trade, Industry and Competition, DTIC, introduced what they call the interim block exemption somewhere around, I think it was February as well. Now, the aim of this block exemption, which was from the Competition Commission, was to set collective tariffs and support the transition to NHI. So it was actually a very complex set of regulations because it was initiated by the Competition Commission to, in effect, enable exempt people from being prosecuted by the Competition Commission, to collaborate on tariff negotiation, to collaborate on tariff practices, etc., with the intention, of course, is to lower it. But it was a very unusual way to do it. And although we do welcome it, just to run you through the principles of it, there would be a tariff governing board. It would be chaired by the senior official from the NDOH, appointed by the DG, which is a potential red flag for us. Well, that will oversee what we call multilateral negotiating forum, MLNF, which will consist of government, healthcare, practitioners, funders, and patient organizations. And their main aim would be one, determine what are the max tariffs for both PMB and non-PMBs. They'd also as well look at evidence for HTAs, and that would recommend to the NDOH HTA committee. They would look at standardizing the codes and then provide and recommend that to the NDOH coding committee. That MLNF would also then suggest or recommend quality management metrics, and a little bit obtusely then recommend that to the OHSC, which is empowered by the National Health Act, although the OHSC actually accredits facilities and doesn't actually look at quality measurement. So it was a little bit strange that it was put into the regulations. And then the last one is to actually recommend meth-informed reason treatment protocols and guidelines to the NDOH. So it was actually a very complex mixed match of rules and regulations. So just in short, our recommendations around that is separate the key functions. There's no one person who actually has all those skills. You can hunt the world over and you will not find somebody who has all those skills because they are so technical, they are so deep entrenched. So we rather suggest, separate the coding, the HCS, the clinical pathways, and the formularies. Let that be handled outside of the MLF and possibly, through academics, because that possibly is where it could be dealt with properly. Strengthen the skills. Ensure that the TGB has sufficient technical capacity, infrastructure, and is able to troll through the data, because we're talking about vast amounts of data to do price determination. Engage, consult, and enable independent arbitration. So make sure that your consultations is true with the professional associations. Use independent arbitrations. Importantly, permit bilateral negotiations. So if a provider, a hospital group wants to negotiate with scheme, enable that. We don't want to outlaw that or ignore that, because we do need value-based care. We do need ARMs, alternative reimbursements. We do need DSPs. That should be part of it. We want to move away from fee-for-service. And we are concerned, that this model, which is going to set maximum limits for PMBs and non-PMBs tariffs, is going to further entrench fee-for-service. Robust governance, and I think that speaks amply, in South Africa's context. We need to make sure it's transparent and properly has, the proper bells and braces around it. And importantly, align with scheme cycles. So schemes already, and most of you know it, right? Has a funding cycle. We've got a communication cycle. Towards the end of the year, we've got to make a decision on what the next prices are going to be, the benefit increases, and we've got to get it in time so that your advisors need to be able to communicate to members, this is what you can expect. So all of these decisions need to fit in with the scheme's current operations. It can't be, holding up the current scheme's calendar. Otherwise, we're going to go into the beginning of the new year and we can't decide what are the new tariffs, what are the new increases. So I think that's important. Clarify funding and implementation. So like all great things, this is fantastic. We love it and support it. We just need to understand, how will this be funded? What is the roadmap? How will this be implemented? And there seems to be a lot of healthcare reform. We just want to understand, what is the bigger picture? So we're hoping for that to come through. And then, healthcare actually is more than just medical schemes. We do know that 40% of South Africa actually is private healthcare. While there's only 15% medical schemes, it means that a lot of people in the public sector use private healthcare as cash patients, make sure they are protected. And then we did agree, we met with the Competition Commission to take them through our recommendations, and they kind of agreed, given the complexity around it, and they are actually, in effect, enabling the framework, enabling the table for people to come around. The policy actually sits with the NDH. They suggested, and they kind of said there will be a republishment. They'll republish a new version of this before it's actually, promulgated. So I think, as mentioned, we as HFO are fully supportive of any healthcare reform that will lead to lower costs, increased access, and better quality of care. Thanks. So now I've got 3 slides which I thought is important for advisors, just to be aware of what's happening in the recent trends. So CMS, unfortunately, has been plagued with a few issues with technology and IT, etc. So they've only managed to publish their 2023 scheme report a few weeks ago. But I've lifted out some of the important trends from that report, and I'll be sharing it with you. So, amidst the stagnant growth in terms of medical schemes live, there has been consolidation. So since 2014 to 2023, being the latest data of it, we've seen the number of schemes that declined from 85 to 71. We've seen membership. So South Africa's population in 2014 was 56 million. In 2023, South Africa's population was 62 million, so it's 11% growth. However, what we've actually seen is that medical schemes in 2014 was 8.8, in 2023 was 9.1. So in effect, that actually only grew 2%. So in effect, the South African population outstripped medical schemes growth. And there's been a number of reasons for it. What has been And you know what we've actually seen is members have actually been financially constrained, and as a result of that, and as a combination of innovation and looking to enable greater access and affordability, we've seen an increase in the number of EDOs, so efficiently discounted options. So in 2014 there were 50 EDOs. 2023 there were 71 EDOs. So the people, principal members that were on EDOs was about 800, that's nearly 800,000 in 2014. More and more people, seeing the benefits of EDOs that are being offered by schemes, and that has now more than doubled to 1.7 million principal members that are now belong to the EDOs in 2023. So aging population means increased healthcare needs. So I'm really looking forward to somebody who can find the Fountain of Youth solution, because I think we do actually have a problem. So in 2014, the average age of membership was 32.1. And moving into 2023, we've aged just under 2 years in the medical scheme world. And that is huge in terms, it may seem like small, but as an entire population, aging of 9 people, aging 2 years, has probably a 3 to 6% impact on claims inflation. And we see that, particularly because the increase in pension ratio has increased from 7.3 to 9.4%. 9.4% of the population means is actually pensioners, 65 years and older. So what does that mean? On the right here, 10% of the medical scheme population, age 65 and above, which is approximately 10% of 9 million, is about 900,000 members. 900,000 beneficiaries account for 29% of the total medical scheme expenditure. So that actually explains to you what the problem and challenges are. As we age, as we get more pensioners, I love my mom, I love my pensioners, etc. But unfortunately, the reality and the harsh reality is, as people age, they consume more and more healthcare services. They get more chronic diseases. They get more, particularly cancer. We've seen increase on prevalence as well as cost. And unfortunately, this shows you that 10% of the population, accounts for almost 30% of the entire healthcare expenditure. So, as advisors, being yourselves as key touch points, with clients, you can play an active role in helping to reduce this or contain it, at least, the healthcare costs by really preventative measures. So it's things like hammering home on wellness checks, vaccinations, especially for over 65s, flu vaccinations, pneumococcal vaccinations, it's such an important thing. Ensuring treatment compliance. So many of you, through your administrations, probably receive for your employer and corporate groups a lot of wellness reports. I really encourage you, add value to your clients and saying, you could actually improve the compliance levels. And by doing so, you could actually reduce, maybe not reduce, but at least contain healthcare inflation for a bit. And as well as, of course, if you, family members or single members that belong to medical schemes. Then the last slide on this, just a breakdown of healthcare expenditure. So just in terms of the distribution of healthcare benefits that were paid in 2023, 239 billion Rand was paid in 2023 towards healthcare claims. 10% was paid via savings, so 24 billion, but 90%, 215 billion was paid from risk. And when you look at it, when you look at that risk payment, 58% was attributed to PMB related claims. Now, just from memory, in 2014, PMB claims accounted for 40%. Now it's almost 60%. So you're seeing that PMB is actually playing a significant driver of costs in terms of it. Overall, of the 230 billion, hospitals remains, the biggest cost in terms of benefits paid. Roughly 36% or 85 billion. Specialists, the next highest in terms of 66 billion or 28%, and medicines, being the third biggest. So between, those three, they roughly account for just over 3/4 of expenditure. In terms of healthcare, provider payment, I think it's worthwhile just acknowledging what the value of medical schemes is here. And this is probably reflected with some analysis, of what is covered. 98% of claims, have been paid, of hospital claims have been paid. There's a 2% that hasn't been paid and it's covered by members. And likewise, if you move throughout, the one with the lowest claims is actually medicine, right? 85% is claimed, but 15% not. And if you look at it, primarily the reasons for, why members are picking up those portions, and this is where advisors can, because members are using non-network, non-formulary utilization as well. But also within that data set there that members are paying, there's some cosmetic and aesthetic purposes which are not included in benefits. But as well, medicines as well, some oncology drugs that are simply not included in the basket of care or PM level care. So those are included there. Okay, I'm going to now move into our NHI challenge. I'm going to run through this very quickly for those that are interested. We've got our video and the presentation, which goes into a lot more detail. So I'm going to really just focus on the highlights of NHI challenge. But if you do want the longer version of it, you're welcome to visit our website and download that video as well. So if there's one slide, I think, and one message that I want to empower you with, to take to your clients, to your members, to corporates, and to anybody, to really empower them about information. It's a slide here. So one is NHI's, unaffordable. Apologies for the typo there. So NHI is unaffordable, it's unworkable, and unconstitutional. Comprehensive care. So comprehensive care is, if the government has promised that NHI would deliver the same, if not better level of care to all 61 million South Africans as received in the medical schemes. In order to do that, we appointed Genesis Analytics, an internationally accredited consulting economics firm in over 115 countries. And they came out that the cost of it would be 941 billion rand for all 61 million people to achieve comprehensive care. What that would mean, right, for individuals or for people, it would mean that we currently have 7.4 million taxpayers in the country that funds majority taxes. On average, the personal income taxes would have to be increased by 2.2 times. So what people are currently paying has to be increased by 2.2 times in taxes. It would mean that individuals, taxpayers, would experience a decrease in take-home pay between 12 and 36%. That's equivalent to raising the VAT. So while it's not actually mentioned, in the Act, but just to give you an understanding, what does this actually mean? It would mean VAT would have to increase from 15% to 36%. So just to highlight what that implication means. But aside from that, aside from the financials and beyond the financials, to achieve comprehensive care, the same level of care that's we experience in medical schemes for all 61 million people, it would require an additional 286,000 healthcare professionals. And that's simply something that is not achievable. So Genesis also looked at a shared resources scenario. So when I say a shared resources, it's saying, okay, what we're doing is we're simply taking what the existing public healthcare budget is and combining it with the existing private healthcare budget. That combined together is 532 billion rand. So no further increases than that. We use that as such. What would be the impact, for our country or for our people? It would mean for the 7.4 million taxpayers in our country, they would pay 1.5 times they currently pay in income taxes, because the only way that the private sector funding, which is paid as after-tax discretionary income, that can be channeled into the public healthcare budget is through taxes. So therefore, personal income taxes would have to be increased by 1.5 times what currently paying. It would mean that those taxpayers would experience a 10 to 15% decrease in take-home pay. But for medical scheme members, and this is where the unconstitutionality comes into effect, medical scheme members would be expected to pay 1.5 times what they're currently paying in taxes, but experience a 43% decrease in access to healthcare. And this is simply, unconstitutional. So, in summary of this, without sufficient funding or sufficient healthcare professionals, NHI cannot work. Full stop. It will lead to, in effect, rationing of care, reduced access to healthcare, and declining quality. It is, in fact, the exact opposite of what NHI's goals are and what its purposes are. So, as I mentioned to you, this is probably the most important slide, and message you can take over. There's a second important message, the second important slide, and that is, as HFA, we don't want to just be the critiques of it. We actually want to build a better healthcare system. And that's part of my presentation, which is what is our alternative proposal we put on the table to make healthcare, accessible for all 61 million people. Okay, so I'm going to very quickly run through it. So firstly, HFA's position, we fully support the goal of UHC. We find the NHI model is fiscally impossible, carries substantial economic and health system risk, and will do the opposite of what it aims to achieve. The hybrid HFA is proposing a hybrid multi-fund model. It proposes a viable, scalable, and constitutionally compliant alternative to what has been proposed to NHI and will achieve UHC. It's simpler, faster, better, and less risky. So very quickly, and most of this is information there's 61 million people, there's 9 million that belong to medical schemes. However, what our analysis shows that actually 40% of South Africans make use of private healthcare. So it's 25 million people make use of private healthcare. I've mentioned already as well that there is about just over 500 billion between public and private. Healthcare constitutes 8.5% of GDP, and the private sector expenditure is funded primarily from households after tax take-home pay. In terms of the supply side, there's just over 28,000 GPs. There's just under 10,000 specialists, just over 220,000 nurses, just under 130,000 beds. So while these numbers may seem, huge in South Africa's context, South Africa actually has 3 times fewer healthcare resources per person than European countries like UK, etc., Sweden, so on, Finland, etc. So who are the medical scheme members? So most of you would know this because you service them and provide services to them. But of the 9.1 million members, 6.1 million or 68% of members are Black. Approximately 51% or 4.6 million are African. 4.1 million of them are employed, 4.1 of the 9 million. The other 5 million are actually beneficiaries, spouses, family members, etc., kids or pensioners. But of that 4.1 million that are formally employed of medical schemes, 67% are actually unionized. So 2.7 million members, belong to unions in South Africa. In terms of monthly earnings, 44% of the 4.1 million or 1.8 million members earn less than 16,000. and just under 40% earn between 16,000 and 40,000 Rand. So collectively, up to 83% of the 4.1 million lives earn less than 40,000 Rand per month. So these are literally your low to middle income members. They are not your elite. The majority of medical scheme members, are in effect working class citizens of South Africa. In terms of contributions to South Africa, economic contributions, of the 600 billion Rand in personal income tax, medical scheme members contribute 3/4 of that. So it's about 443 billion Rand that they do. So I hope, this slide actually shows that medical scheme members are diverse. Majority are low to middle income workers and contribute significantly to SA's economy. Very quickly, a summary of the model scenarios. So in comprehensive, Genesis modeled two things: comprehensive care and shared services, but they also considered as well, if NHI can achieve, high efficiency savings, so like almost a 45.5% efficiency saving, what would it mean for taxes and access and so on? But if they weren't able, if NHI wasn't able to achieve it in a low efficiency saving, if it only was able to save 13%, what would it mean? So the scenarios are pretty much there. I've mentioned to you already, on a high efficiency saving comprehensive care, it's 2.2. Health expenditure as a percentage of government would be 33%. That means 1 in 3 Rand would be spent on healthcare. But if in a low efficiency, it would mean that taxes would have to be increased by just over 3 times what they currently paid. And healthcare budget would become 44% of government. In a shared services, it's 1.5%, but as I mentioned, medical scheme members will be experiencing a 43% decrease. And in a low efficiency, where taxes are increased by 1.5 times, they will experience a 65% decrease in access to healthcare, or relative to comprehensive care. There is a scenario, and I think I'll just mention it. If we carry on down this path, NHI is proclaimed, we start to raise taxes, medical scheme members are prevented from, offering services that are offered as NHI. And if the tax increases does not realize 25% increase, we will be in a lose-lose situation. Medical scheme members will lose access. Public sector members who use public sector will be worse off. And this is a scenario that's simply untenable. It'll be catastrophic for the entire country if we cannot achieve a minimum of threshold of 25% increase in taxes. I wanted to spend one more minute here just in terms of what does NHI comprehensive care mean? It will actually mean, a reduction in take-home pay by 12 to 36%. So just to unpack that, as I mentioned, there's 7.4 million taxpayers. We've modeled on the left-hand side, the annual salary, average annual salary. So taking, for example, somebody who earns 92,000 Rand per year, is roughly 3 million of those taxpayers. Their top tax rate is 18%, but under NHI for comprehensive care, their tax rate would be 41%. What that would mean in take-home pay, the current money that they're spending towards medical scheme, assuming it's 10,000 Rand, roughly 10,000 Rand per year, firstly would now be channeled to NHI. But on top of that, they will still have to contribute an additional extra 10,000 Rand. So they'll be out of pocket as of today, in today's terms, an additional 10,000 Rand in take-home pay that would have to go to funder. For those members that are not medical scheme members, they're not being contributing to medical scheme, they will actually be far more, experience greater financial shock because they would have to contribute an 21,000 Rand of their 92,000 Rand towards NHI through taxes. So that's the table for completeness. But if you can look at it, 6.5 million low middle income taxpayers who earn less than 565 will be severely impacted. And as I mentioned, the impact is between 12 to 36% of taxpayers. So the economic consequences: increased financial strain on low-income workers, flight of high-income taxpayers. We'll see tax avoidance, evasion, and reduction, and lower take-home pay, lower disposable income will actually reduce GDP. And it won't just be the healthcare sector, it'll be all sectors of the economy will be impacted. And the high tax rates will deter foreign and local investments. So what we're fundamentally saying, or the research is saying, is that a narrow tax base of 7.4 million cannot carry the funding requirement for NHI. The result is economic hardship for millions of South Africans, of taxpayers. And as I mentioned, just to reiterate, to provide comprehensive care, we need 286,000 additional healthcare professionals. That would mean the doubling of GPs, the doubling of the current number of nurses, the doubling of the current number of pharmacists, and tripling the number of specialists. So on top of that, right, that's in a high efficiency saving. In a low efficiency saving, the number is actually even worse. It would require 431,000 additional healthcare professionals to achieve the same level of care that medical scheme members receive today. And obviously, most of you guys are aware, constraints. We only produce 3,600 medical graduates a year. Qualification takes significant time, between 9 and 13 years. So it's not achievable, in any time, in any few years. It's decades away from it. So, summary point: no amount of money can fix NHI without the people to deliver healthcare. I mean, there is no healthcare without doctors, pharmacists, nurses. And without those skills, South Africa will experience healthcare rationing. Cool. And, very quickly, healthcare rationing under NHI impacts access and quality. So you can read through the slides, but basically, members of patients will experience reduced resources and increased workforce pressure, such as medicine and equipment shortages, limited hospital beds and theaters, experience loss of patient choice, restricted access, longer waiting times, or unavailability of procedures. And it's a current reality, right, where patients will be exposed to, rationing. So limited renal dialysis, for example, 65 years and older, limited ICU for premature babies under 1 kg, which is currently, a protocol, from what I understand. I mean, unwritten, but it's a protocol in the public sector. Limited treatment for cancer, that's unaffordable. So it does mean fewer resources, overburdened healthcare professionals, and restricted patient choice, limited access. Thanks. Cool. I'm going to try and wrap up now. So the 4 grounds of challenge is: 1, we find the Act is irrational. It's incapable of achieving its purpose. Section 33 entrenches a single fund model, which limits the role of medical schemes to complementary cover and infringes the right to access healthcare. The Act is not a reasonable measure where the government actually has to take progressive steps to realize it, not retrogressive. The NHI Act is unconstitutionally delegates legislative authority to the minister. So we've asked, for the Act in its entirety to be declared unconstitutional, invalid, or, sorry, am I running? Cool. Okay. And then certain sections of the Act to be declared unconstitutional. Okay, I am going to, I think I'm going to stop here, but basically, we've put forward an alternative model. We'll just finish on the slide here, which is, it talks to alternative model. What we are saying is, let's have a common benefit package across public and private sectors. We still have a monthly fee paid to medical schemes at less cost than NHI package, with the difference paid from medical schemes. Allow voluntary contributions by members, and then medical scheme members have access to the package. So I think, thank you very much. I think let me leave this there and rather just take questions. If needs, we'll hand over. I know I've run over time.
Not a problem. Dinesh, thank you so much. We are so indebted and really grateful for your insights this morning. Just a message to the delegates out there. The HF Health Funders Association media briefing on the legal challenge, as well as the Genesis report and the recording, are available on the Health Funders Association website, hfassociation.co.za. We'll make sure we get that up on the chat, and we get it that Bernard makes it available. hfassociation.co.za. You can go and watch the full recording there and read through the research reports. Dinesh, thanks again. You're a great friend of the FIA, and it's only a privilege to be able to collaborate with you. Thank you again for your time this morning.
Thank you. Thanks, everybody. Yes.
Then a message to the delegates here. We're going to head straight into our next presentation from Vernon. I'll introduce him now to the delegates. I'm sorry we are running over time, but I'm sure you appreciate how important this information is for you, for your business, and for your clients. The insights you're gaining here today will certainly enhance your service offering to your clients. So without any further ado, it's once again my pleasure to introduce Vernon. Vernon is CEO of Unity Health, division of Ambledown Financial Services. Many of you will know Tiago Carvello from Ambledown. He's a great friend of the FIA and has been involved over the years in collaborations, meetings, negotiations with National Treasury and FSCA to ensure the ongoing provision of demarcation products for our clients. Vernon is a qualified actuary with over 30 years of industry experience and has played a key role in shaping primary healthcare products in South Africa. Vernon brings valuable international perspective from his time as head actuary at AIG International Direct Marketing in New York. More recently, Vernon has been actively involved in policy and regulatory work, serving on the CMS Advisory Committee for LCBO framework with some of our delegates, contributing to NHI discussions and working with the SAIA Health Insurance Forum to respond to recent Department of Health developments. Vernon, you're a great friend of the FIA as well, and it's our pleasure to welcome you this morning.
Thank you very much, Greg. Can everybody hear me? Yeah.
We can hear you, Vernon. All good.
Yeah, let me just. Okay, can everybody see my screen?
Perfect.
Okay, good morning, everybody. So today I'll be talking about the LCBO, or often called primary healthcare insurance, update and current developments. So I'll just go into a little bit of a history, just very quickly. I'm sure many of you been in the industry for a while will probably be aware of all of these things that have happened over the past 20 years or so. So the discussion really started way back in 2005 with LIMS, and LIMS was an initiative to consider a low-cost medical scheme option for low-income earners, but it didn't really gain any traction. So, and then in about 2008, the CMS challenged Guardrisk regarding gap cover, and they actually lost that case, and it's largely because of the definition of the business of a medical scheme. So there were three components that had to be met in the Medical Schemes Act to do the business of a medical scheme, and all of them had to be met instead of just one of them. And in that case, Guardrisk actually won that case. But soon after that, the demarcation debate started, where the CMS wanted to, basically they wanted to protect medical schemes and the medical scheme risk pool and not have all these health insurance products around in the market. But that took quite some time. There were a few rounds in terms of those demarcation regulations. It was a lot of work. We worked with them. I think a lot of players worked with National Treasury, the Council of Medical Schemes, to put together the demarcation regulations. And they actually came into law in December 2016. And it was included a lot of products on the short-term and the long-term side that could be marketed lawfully apart from medical schemes. But primary healthcare products were actually not included as a product category in the demarcation regulations. And so the National Treasury and the Department of Health and the Council of Medical Schemes came together and put together an exemption framework where insurers could then apply for exemption to do the business of a medical scheme in terms of Section 8H, and then had to actually apply to the CMS to get exemption. And that became effective 1 April 2017. And then the first round of exemptions was for 2 years. I extended it for 2 years, every 2 years thereafter. Then they extended it for 1 year, and now they've recently extended it again for another 2 years. So it's been going on for quite some time. So it will be 8 years now that we've been operating under exemption. So the intention of the exemption framework was to allow the industry and the regulators enough time to create a framework to transition these products into a medical scheme environment. That was the intention, right? So they always wanted these products to be in the medical scheme environment, but the regulatory environment doesn't really allow that to happen at this point in time. So in 2020, the CMS set up an advisory committee and broke the committee up into 4 different work streams. And this was largely to provide input to the CMS on how we should actually transition these products into the medical scheme environment. So the 4 work streams that were created was for market and affordability, benefits and pricing, compliance and legal governance, and risk and implementation. Now, more recently, based on the input that the advisory committee gave to the CMS actually put together a report on LCBOs, and the minister then published a general notice 5872 in February 2025, this year, for public comment based on that report. We didn't actually see the report until it actually got published. So this was all done by the CMS, although this was supposedly based on input provided by the advisory committee. The report was contradictory in some places. In some areas, it would actually talk about the products continuing. In some other areas, it would actually talk about these products that should be discontinued. So it was a little bit unclear of what the message was in the report. But the minister, in his general notice, actually raised some concerns. It was only a 2-pager, but he raised some concerns regarding primary healthcare products. And he indicated that low-income earners had access to more benefits for free in the public sector. So why should they buy primary healthcare insurance products if they can have access to these benefits for free in the public sector? He also indicated there was no research to support primary healthcare products actually offered real value versus the cost involved. He also noted that the individuals buying primary healthcare products often found that the benefits were vastly different and possibly even less than what they originally signed up for. And he also indicated that the proposed minimum benefit package was insufficient to meet the needs of the individual. And then the last concern he raised was it was unclear how these products are going to be aligning with NHI. So together, the CEIA Healthcare Committee or Forum met and decided to put out a response to the general notice. And what we did was to actually get some data and statistics based on what the the minister had outlined as what his concerns were. So we actually did a survey, the members being insurers and administrators of primary healthcare products, conducted a survey on primary healthcare members and primary healthcare GPs to consider these concerns raised by the minister. And it was quite overwhelming, to be quite honest. I mean, we had the sample size is huge. It's almost 20,000 members that were surveyed and over 400 GPs that were surveyed. So anyone that knows statistics knows that this is super significant, and so the data is highly credible. And this would be quite interesting for brokers out there, intermediaries out there, because also quite telling in terms of, I'm going to share the data with you, but it's quite telling in terms of when you're doing your needs analysis and understanding what the needs are out there. We got solid results on that. So the member survey results basically are in the feedback that we got is in stark contrast to the concerns raised in the general notice. So I'll just go through these one by one. We actually asked 6 questions to the members. And the first question, these are very simple questions. So the first question was, how would you rate your primary healthcare insurance policy? Very simple. And we basically, the member could answer either very satisfied, satisfied, neutral, dissatisfied, or very satisfied. And it's quite telling that more than 88% rated their primary healthcare policy as either very satisfied, satisfied, or neutral. So they're all happy. So 88% of members are happy with their primary healthcare policy. The next question we asked is, do you believe the benefit offering caters adequately for your needs? And 81% believe their primary healthcare policy adequately caters for their needs. Remember, these products are very low cost, so they don't offer everything that a medical scheme would cover. So if you have 80% believe that it adequately covers your needs, is quite significant, I think. The next question we asked is, do you believe you receive better care in a private healthcare setting compared to a state facility? This is actually a no-brainer, I think, but 95% believe that they receive better care in a private setting. The next question we asked, are your policy benefits in line with what you expected when you originally took out the policy? And this comes back to the concern raised by the minister that members sign up and then they find that they don't have the benefits that they originally thought they would get. But more than 80% believe their benefit offering is in line with what they actually signed up when they originally took out the policy. So it means that advice given to the clients and the applicants is obviously pretty accurate. The next question is, would you recommend primary healthcare insurance to someone who currently can only access care via state facilities? And more than 89% of existing members would recommend primary healthcare insurance to someone who doesn't currently have primary healthcare insurance. Again, very significant. And the last question, do you spend less time away from work when receiving treatment in a private setting compared to a state facility? And 92% believe that they spend less time away from work compared to when they used to be able to access public facilities. So this is, again, very significant, and it's quite important for employers to understand that this obviously impacts productivity in the workplace as well. We then surveyed the providers as well. We thought it was quite important to get an understanding from their point of view as well. And again, it was the results clearly indicate a contradiction in the concerns raised in the general notice. We asked them 2 questions. The first one was, do you believe the primary healthcare benefits offered by primary healthcare insurance are sufficient to treat your patients? And 78% of GPs believe the benefit offering to be sufficient in order to treat their primary healthcare insurance patients. And this is, the minister actually raised an issue saying that the benefits, we created a PMB for primary healthcare, and he believed that was insufficient to treat patients, and it needed to be more comprehensive. But in this case, the GPs that were surveyed 78% believe that it is sufficient. And again, we asked GPs similar to what we asked, similar question. Do you believe that patient outcomes are better in a private setting compared to a state facility. And 98% of GPs believe that patient outcomes were better in a private setting compared to a public facility. So these survey results are quite telling, I must say. I was quite, I wasn't surprised, but it was quite, I didn't think it would be so significant, in fact. The last concern that was raised by the minister was, how does this align with NHI? And we looked at this, and we've been looking at this from a slightly different angle to what was raised in the earlier presentation, as it was looking at it from a cost point of view, but looking at it from, well, what happens to the population demographics as we proceed into the future? And how does that impact on the costs and the funding of NHI? So it's not just looking at what is the current requirement and what is the current impact on taxes, but what does that look like going forward, the next 50 to 100 years? Because if you implement an NHI, it's not just for a 5-year or 10-year period. You need to do this for a long term, like 100, 200 years. So in South Africa, what we found based on the United Nations projections is that it's an aging population. In fact, one of the fastest aging populations in Africa and around the world. If you look at the current projected birth and fertility rates, we're currently at 18.99, 2.3. We need 2.1. This is the average around the world, 2.1 fertility rate to just replace the population. And because we have a lower life expectancy in South Africa, 2.3 is approximately what we need to replace the existing population. And that was last year. And so going forward, our fertility rate is actually below replacement ratio. So as we go into the future, we expect the population to increase a little bit, but probably around about 2075, 2080, the population will start declining, and all the while it will age quite significantly. If you look at the changing younger and older populations, if you look at, say, 65 plus, we currently have about just under 6% of the population above 65. At the end of the century, it will be 20.5%. So that's very significant. And so what does that mean for NHI? So because of the aging population, and it was raised in the previous presentation as well, what's happening in medical schemes is that an aging population causes the per capita healthcare costs are expected to increase, right? So increase as we age, we have the higher frequency of treatment and also higher severities that cost more as well as we age. So the per capita healthcare costs are expected to increase probably between 1% and 2% above the tariff inflation. So if we pay doctors, say, increase their tariff by, say, 5% every year, it means that the actual cost is going to be around about between 6 and 7% increase because of the higher frequency, the increase in frequency and costs from members going, needing treatment. So the other issue that this causes, so this increase in utilization means that there's going to be an increased demand for healthcare workers. And this is happening around the world. So the world's except in Central Africa, but pretty much all around the world, the population is aging, which means that there's going to be an increased demand for healthcare workers everywhere. So we need to take care of our healthcare workers, and we can do that by paying them more, right? So otherwise they're going to leave and go to another country. So that puts additional pressure on inflation, or if you have to pay them more, it means that the costs go up more. So the aging population and the increased demand for healthcare workers places a sustained upward pressure on healthcare costs as we move into the future. If we look just very, very briefly, if we look at the funding side challenges, our working age population, more than 80% of them have no retirement savings. So that's huge. It's massive. And of that 20%, approximately 20% that do excuse me, do have retirement savings, their replacement ratio is about 30%. So that means when they do retire, they're going to be spending a lot less, and about 80% of people going into retirement over, say, the next 30, 40 years have nothing to spend. So how are you going to sustain the GDP going forward, and hence taxation to pay for this NHI into the future? So we have a lot of funding challenges as well, not just costing challenges. We talked about the tax rates in the earlier presentation and what the impact would be if we had to fund it currently. The Laffer curve is an economic term which actually is a curve which plots the tax revenues versus increase in tax revenues versus an increase in tax rates. Now, it's kind of logical. As you increase the tax rates, the total tax revenues in the country would increase. But this only happens to a certain point, right? So after a certain point, as you increase tax rates, people have less to spend. So you have less consumer spending. And if you have less consumer spending, you have less GDP growth. If you have less GDP growth, there's less opportunity for employment. So there's less employment, and hence your total taxation actually starts reducing. And that's kind of where we are right now. That's my sense. If we just look at the data, over the last 10 years or so, we increased personal income tax. That was the highest tax bracket, was increased, I think, from 41 to 45%. We also have some no bracket creep adjustments. That also has quite a huge impact. VAT was also increased from 14 to 15%. And during this period, the average GDP growth has only been about 0.9%. And we're seeing pretty much similar numbers over the last 4 years and going forward. In contrast, before they actually increased those taxes, the average GDP growth was, in fact, between 1994 and 2012 was actually 3.2%. And, if you have higher GDP growth, you have higher, you should have higher, there's a correlation between that and taxation. So you should have, in the long run, higher total taxation as well. So for me, it appears that we've already exceeded that point on the Laffer curve, where increasing tax rates will result in higher tax revenues. We're actually going to end up with lower tax revenues. So you might have higher tax revenues maybe in the first year after increasing tax rates, but then thereafter it dampens consumer spending, GDP growth, and you're going to have lower taxation. So it really doesn't make sense. We don't really have any room to increase taxes to fund NHI. So it appears very, I don't see a solution in terms of how to fund NHI. I mean, I think we're going to have to work with our existing health budget, and as the population ages, that's going to become under pressure to sustain. So just coming back to the transition into the medical scheme space, the LCBOs into medical scheme space. So, of course, medical schemes would welcome this, but there are some challenges. There are many legislators. This came out of the advisory committee as well, one of the work streams, that there are many legislative changes required, which will probably take years to achieve. So in the meantime, if we did operate in the medical scheme space, we would still need to operate on an exemption process going forward. So that's not ideal. There's lack of clarity around that. If we do move into a medical scheme space, it would mean that there's additional costs involved, because we have to incorporate solvency requirements for these products. So it will increase the cost of these products in the medical scheme space. On the other hand, the Minister of Finance, this would be a much quicker way to actually, well, not legalize, but have these products operate without an exemption in a particular space, is to have the Finance Minister add primary healthcare products as a product category in the demarcation regulation. So this will be much quicker, and of course will be more cost effective for policyholders. The future is not very clear, but certainly in terms of NHI, it's unlikely to materialize in any significant shape or form, mainly due to the cost and funding challenges around that. There are probably about 800 to 1 million lives currently on primary healthcare insurance, and the growth has been phenomenal. There's been a lot of growth, and it's I think it's going to be very difficult to discontinue cover for these lives. It is therefore rational to continue and support the growth in the private healthcare sector. I think this is quite, in some way, good news for the intermediaries. To see that there is a sector where there is quite a need. I mean, we've shown from those survey results, people like the policy. They feel that they get better care in the private sector. So there's certainly a need for this product, and it certainly help the intermediaries to grow this market. Although currently it's unclear where these products will, whether these products will actually transition into medical scheme space or be added as a category in the demarcation regulations. The latter is probably a cleaner approach and more cost effective for the member, but we don't know. We'll wait and see what happens. And that's the end of my presentation. Thank you very much, everyone.
Thank you, Vernon. Valuable insights, and I'm sure our members will take a lot away from your presentation. I think Toneshin is still online. Maybe one or two questions, if I may pose them to you. Toneshin, if you want to come in first, do you believe that Denosa will approach the court to be a friend of the court with to assist the health minister and the government in defending NHI? Any general comment in that regard? Either of you.
So thanks. Can you hear me?
Yes, we can. Thanks, Toneshin.
Great. So I can't really tell. There are a number of impacted parties, Denosa being one, Section 27 being one, and all of those may approach the court. My concern is it's going to take us 5 years to see light of day of constitutional court. It'll take us 5 years, and it'll be one winner and one loser. But the biggest loser in all of this will actually be the 61 million people, because between now and that 5 years of constitutional court, we would have lost an opportunity to reform healthcare. So, that's why our plea is, for the president to sit down with BUSA and let's work on an alternative that's affordable and sustainable. Thanks.
Thanks, Vernon. Would you like to add any comments?
Nothing from my side.
All right. And then, gentlemen, another question asked was, one of our consultants believed that his understanding was that BHF lost their case, not on the merits of their argument, but because they did not get condemnation. Toneshin, you're probably closer to what Board of Healthcare Funders were doing. Your thoughts?
Thanks. I assume that's the case regarding the LCBOs.
Correct.
I don't believe that's the case. I think there was an issue regarding the merits. But having said that, BHF has actually appealed the matter. So I think we'll see how it progresses.
Vernon, have you got any insight?
No, not from a legal point of view. That's not my forte. Sorry.
And then last question here. Toneshin, maybe address this directly to you, but Vernon, I'm sure you might have a comment. One of our consultants is concerned that the LCBO will go nowhere if only focused on out-of-hospital care and not including hospital care. Maybe we could just cap it at that. I won't go into the rest of the question right now. I can get to you later on that for more detail. Your thoughts, gentlemen?
Okay.
Sure. So, Tony, you go first this time.
Okay, no problem. So the I think the framework for the primary healthcare products doesn't include hospital care, but the hospital hospital care products or hospital accident products are allowed in terms of the demarcation regulation. So those are products that are already allowed for accidents and emergencies. I'm not sure if that's answering the question or if there was something else that I should talk about.
Tanesha?
Sure. So, in our modeling, right, as part of it, we estimated that the market size is 10 million for primary healthcare products. So that's excluding hospital cover. So it's meant to work, majority of people need a primary healthcare physician or primary healthcare consultation. So it works to a certain point, but when you get to, call it, catastrophic or acute conditions, you do need health hospital. And that, I think, is where the top work with the public sector needs to come in. So it is a work in tandem. But I do strongly believe, and we've seen it in the actual financial numbers, that, there's about, is it 15 billion or 20 odd billion rand that's spent on out of pocket, and lower acute services, which is where we're looking for at primary healthcare products. So there is a market, there is a demand. It's just about making it affordable and properly accessible. Thanks.
James, thank you very much for your time this morning, for your collaboration with the FIA. You indeed are, we consider you friends, and we look forward to collaborating going forward, not in any anti-competitive behavior, but to ensure the well-being and the sustainability of our intermediary force, first and foremost, because by looking after them, the clients get looked after. Thanks again. Thank you, everybody, for your participation, for your attendance of the webinar today. Bernard, Tulani, you guys outstanding as always in the background, the secretariat there, please. Thank you to Sam and Brad for everything they do, and for Sandra. And then a big thank you from my side to my vice, Andre, and to the rest of the FIA Exco for your ongoing efforts to ensure the well-being of our intermediary force. Please support your branches, support your branch representatives in the healthcare Excos and your regional representatives. God bless everybody. Take care. Wishing you everything the best for the rest of the week.
Hey, everyone. Thank you, Greg, and to our speakers as well. Have a great day.
Thank you, Bernard. Anything from you?
Just very quickly wanted to say thank you. And yeah, just a shout out to the FIA Advice Summit, which is coming up the 9th of October. So be sure to diarize that. And just again to confirm, we have applied for CPD accreditation for this webinar. We will keep members in the loop as that progresses. So thank you again, and hope you have an awesome day. Thank you, Greg. Thank you to Lani for all the hard work in the background as well, sir.
Cheers, everyone. Take care.
Bye. Have a good day.
Be safe.